All right, all you devils out there, Sam here with you. It's just now 1 o'clock here, Friday the 22nd. So we'll do a quick little Bitcoin update here. And we're going to venture into some new material here. Members have already had a good, you've had a look at this for a few weeks here. We did make it public to our Discord members that are in doing the have joined us under the free membership. And before I dig in here, I don't do a very good job of promoting my own business. I probably should. I just figure people are interested. They'll gravitate over to us. They'll seek us out. But I should just remind you here that you can always join us. If you're interested in what we produce, the content we produce, our approach to not only trading but teaching. Well, we've got a lot of plans for you here. Of course, you can always join us for free, right? That's what I was just referencing. And there's more here than just pop into the Discord and say hello. There's actually a pretty good amount of content for a free member. Of course, it starts with in the belt system. We give you full access to the white belt. So you have access to that. That's 4 hours of video training. That's if you're sort of on the newer side to technical analysis. That's an excellent way to start. But it'll get you into the Discord, and you can interact with some other members and get a feel for the experience, right? I always tell people don't ever take my word for it or anyone's word for it. Always talk to customers. Good way to do it, right? Belt system, of course, that's the premium. Gets you access to all the upper belts. And then for those of you that kind of want to bridge the gap, you want access to a full experience with the exception of the upper belts, right? So that's the only distinction between the two. But this lets you participate in all of our polls, all the live streams. You're welcome to post content. I mean, there's actually quite a lot there under the social membership. The only thing it excludes is the upper belts, right? So, and that's not for everybody. And much of what I'm going to introduce today is to speak to that, right? Because not everybody wants to go all the way into elite status as an Elliott trader, right? And not everybody needs to, right? It's just a personal choice as to whether or not you want to go that deep into it. Right? But just to remind you, lots of good choices here. Okay, so with that said, all right. Probably haven't promoted that in 6 months, but I should do it more than I do. Okay, back to Bitcoin. So I figured we'd start out here since we've been using this kind of as our long-term reference, the Brave New Coin Liquid Index here. Well, we're getting a little wonky here. So obviously the markets are getting rocked by the pending interest rate change, and Bitcoin is, trading lockstep with risk assets. So we do not have the lack of correlation that many of us had hoped we would find. Does it come? I think so eventually, but at the moment we are lockstep. But you might as well just follow the NASDAQ, right? You're going to know where Bitcoin went. So as we sit here now, as it would relate to this longer term count, it's getting a little tricky here. We didn't quite get just what we wanted there. So there's a couple of scenarios here. Let me zoom in here a little bit here, and I'm not going to spend a lot of time here. So one thought is here as we look at this, the thinking was it's a little convoluted in here, but for the most part, even if I just use the pivots, right? We've got a 3 in here. Oh Jesus, come here. Did I shrink that? I didn't really want to do that. I like it a little fatter. Okay, so we have a 3 in here. Well, so we're trying to, if it's going to hold as if it's going to hold as a triangle, well, we need a series of 3s. All right, now we're kind of backing into it here. Oh shit, that's an old count. Well, you could do it this way. So you go A, B, C. Oh, well, shit, you could do it either way, actually. You could do it this way. You could do it in A, B, C here. A lot of people really don't like that count because of the lack of proportion. A, B, C here. A, B, C here. Well, now here, the potential there, what we had thought, because we didn't make it far enough, right? We didn't make it to the prime zone, which would have been up here literally at the golden zone. If we're not going to get that, and this sure looks like it's putting in a 5, well, we got to consider the alternates. Okay, so what? Well, there are a couple here, but the first one, the first question you have to ask yourself is, are we invalidating the triangle? Is the triangle now being blown out? Well, not yet. We may not get there exactly as we thought, as in we may not get this last leg up here. Right? In fact, it doesn't look like we're going to. So you got to look at that and say, well, does that mean the triangle is invalid? Well, I don't know that we need to go there yet. I mean, right now, what my thought would be is that we're just going to accommodate what the market is giving us here, which is this. Now, so right off the bat, much like, if you're looking at this as an A, B, C here, right, the lack of balance between the two, okay, right, obviously I see it. But even still, right, if you're doing it this way, if this is the A, this is the B, this is the C, boy, the D, we're getting mighty constricted here. Now, it could just be the timing of interest rate changes from the Fed, but there's nothing that's happened here to where you'd say, oh, cannot be a triangle. Can't be a triangle anymore. If anything, it looks like we might resolve this, right, if we're going to hold here. This will be the big test right here. Right. Well, for a number of reasons. Well, one, we're going to come into all the liquidity down here. Two, we're going to come into this trend line where if we get too far, right, we are going to blow out the triangle. Now, a little overthrow is not under or over in the E's is common, but we go too far here, and you're going to, this is going to start to fall apart. Now, I know you look and you think, okay, maybe a descending triangle, maybe be last stand here, but we'd really. What you want is this, right? So if we go too far here, this is going to start to fall apart. Now, the ugliest of counts, right, for a bull, right, for if you're a long-term bull, is that we'd rework this into a 5, and this is 1, 2, right, and 3, 4, right? Now, something very different's happening there. I do not think that's what's happening, but as I've said before, right, I'm wrong often, right? Most traders are, right? Our goal is not to be right. Our goal is to be profitable. I know it sounds like it's contradictory. Well, how can you be profitable if you're not right? Well, if you don't know the answer to that, all the more, if you don't understand that, all the more what you need to get over here, right? If you can't make sense of that. Okay, but not to dwell on that. Well, okay, so one thing to remember, and this is a great example of it, the market moves from pools of liquidity to pools of liquidity, right? So it's not hard for us to look at this and go, wonder where all the liquidity is in Bitcoin. And by that, I mean a combination of where are we going to find stops, where are we going to find buyers, right? I mean, where are we going to find longs defending? I mean, this is a monstrous pool of liquidity down here that everybody on the planet sees, right? So to eventually head down here and tap into this liquidity has always seemed probable. In fact, it would have been surprising if we hadn't. So to come back down here, and let's just consider it for a second, right? So could we do it here? Well, how would that look for the geometry of this? Now we're over a year in this sideways action, right? We don't know it's going to be a triangle, right? It could be something very different, but right now it has all the makings and the frustration of you can feel in the market as the market is just going sideways and people are getting pissed, right? It's like, come on, man, what the fuck? I thought we were going to new high, right? So you can feel it, which again makes me lean into the triangle all the more. The more frustrated people get, the more likely we are getting towards a low. Now you look at it and say, well, why? Why would we put in a low here? I mean, you got to just think it through. It's not just because there's some magic number we're going to hit there. Why might we potentially be putting in a low here? Well, one of the things that we would consider, one scenario that would seem logical, is that there's going to be a grab of the liquidity here to do a couple of things. One, it will completely just mind fuck a retail, right? So if we come down here and we did something like this, right? Which again, now that if we're doing that, right, triangles, likely we're doing something else is going on. But if we're doing that, retail is going to be just very, well, I'll leave it that way, right? They're going to be discouraged, right? So to come all the way back down here, a grab of liquidity and then go back up, which, okay, I mean, certainly, the Elliott count was going to be tricky to figure out, but we'll figure it out eventually, right? There is no chart pattern that ultimately couldn't be analyzed with Elliott Wave Theory. So it's tempting here right now to think, it's not going to hold. It's not going to hold. I think really the question right now is if we tap this liquidity, how deeply into it do we go? Because there's a ton of stops right there. This is actually more amazing that they couldn't get them here, right? That was what caused all of that, right? The fact that they couldn't get them right here, just astonishing, right? All of these were right. Well, this is a great example of it, right? So all the liquidity gets established here. These wicks come in, grabbing liquidity. The last time they can't get the low, new high. So for us to come down here, how far deep into it do we go? It'll be interesting to see. So that doesn't mean necessarily that it's a foregone conclusion that we're going to get in here, but it sure does make sense. Just looking at structure, price action, where we know liquidity will be found. Oh, you could say the same thing right, to some degree. You say the same thing happened up here. All right, what are they doing there? Even if I just drag it over here. Let's zoom in there a little bit. What's happening here? All right, all the stops that were right here. Again, it's just again, not to be blowing my own horn, because this is something that was taught to me both by mentors as well as the market. This is never where you want to enter the market, right? Because what's happening here, right? All the stops are getting run. That's a big liquidity grab, and now we've gone. So what'd they take it from? 48 to 38, right? Almost a 10K swing. Right? It's not quite 10K, but 9 plus. Who's a buyer here? Who buys there? Right? We talked about this a lot, right? That's retail fish, right? So they get eaten by the whale. Okay, so with that said, now, so let's think about this. All right, well, how could we work this out? If this is going to be the D here and we're coming down to the E for the 4, okay, well, take note here from swing high to swing low, we just tapped the 50. Now, here's the algo target, right? So if we're going to come down and get that target, well, the triangle is going to blow up, and you know that won't be the count. Here, this is, Jesus, everybody with a TradingView account has got this somewhere, and so what's the assumption? The assumption is, oh, well, we're going much lower, so this is how someone new to technical analysis is going to approach this, right? They're going to say, okay, well, we're going to do swing, retrace to 50, so at least we'll go 100 of that. As in, we'll take this length here, and we will project it from here. Right, so we go up, we tap the channel, down we go. Well, not so fast, right? So what does a whale see here? Oh, let's do it this way. Actually, let me come off of here, because it lags real time a little bit. So I can look here and see it lags a bit, right? This being a daily chart, I'm looking at real time up above me on a monitor up ahead, up above me here. It lags a little bit, but it's good for the long term. Okay, where are we going, right? But this as a target is not to be ignored. Now, based on what I was just saying, okay, let's take the triangle out of it just for a second. With the algo target below this low, can you see how that it would be like a whale is looking at that going, God, I can go grab all the stops down here, right? Get everybody completely freaked out, thinking we're gonna fall back down to 3K. And now how we're gonna reconcile that count, I'm not quite sure at the moment, right? Depends on what comes out of here. But you can just looking at, okay, what are scenarios here? Wouldn't that make sense? Couldn't you just see? Oh God, I see exactly what they're gonna do, right? You can almost see it coming. Because of all the places where they're going to be the highest concentration of stops, it will be under this range right here. So if they start to approach it, I would assume it's going to break. Right now, do we do this? Right? No, no one knows till we get there. But that is a path that seems you certainly could understand it. Right now, what happens there? Another story. Right? We shall see. Okay, so let me take it. Oh God, what do I have over here? Here I've got it on. I've got it. Here, this is on Coinbase. Oh, here, let me pull out a little bit so we can see all of that structure. Oh shit, where am I here? This is my A over here. B. Let's get that. Put those in yellow here. Oh, I changed up the colors a little bit here. I'm going to introduce you some new tools which kind of lend themselves to this color, and then I got a little Ukraine, right? Go Ukraine on my color choices here. Okay, so this is what's throwing a monkey in the wrench. So let's see, here I can kind of open this up a little bit more so you guys, because this is the count we've been talking about here, potentially in play, right? It's always just potential, right? These are totally fluid. Right now, this appears to be the most probable count, but all of a sudden, right? So we're looking here and we're compromising along the way, going, okay, let's make sense of this, because this is very tricky. at least from an Elliott Wave perspective, this is very tricky here. Well, shit, it's tricky, period, right? So there's a lot of chop, a lot of misdirection here. So right off the bat, we're going into a truncated fifth here so that we can accommodate the 5, right? And the fact that this looks impulsive. And then if to do that, if we call this the 5, well, then we can put a 3 in here. So we can get an A, 3 into a B, 3 into a C, 3 into a D, 3 into an E. Right? This is a pattern that you see in Bitcoin with incredible regularity. It just looks like a 3, right? So it does this so consistently. It'll just do this, this, and then this, right? So you see it here. Oh, shit. You see it finishing here. You see it just did it here. Where you're not getting that nice clean, oh, there's my 5. Okay, oh, I know I'm done, right? It's very commonly, you'll see just this rollover 3. Rollover 3. Here we did actually get it, but again, it's kind of a rollover to the finish. And anyway, I digress. If this is A and we're going to go into a triangle B and then this is the C, right? So that's how we accommodate the fact that we're looking for 3s. Sorry, I had to sneeze there. Okay, so here's the 3 that we've been working from, right? And it's quite technical actually. But, right, so we had been thinking, oh, 3, that would be a W, right? So we would be looking for a 3 here into an X, Y, and then we'd still have that target up here for the 618 for the D. Well, it's not coming that way. That's not how it's unfolding here. We would have been looking for, oh, if this is the 3, we were looking for an X here. So if this is, well, here, let's label it shit. Here, I'm getting ahead of myself. If this is the W, well, we were looking for an X here and then up to a Y. Well, this is not accommodating that, right? So you can't hold out for, oh, this is what I wanted it to be. That's not what you got, right? What we've got here is an impulse going in. So I'm going to take this off because I'm at this moment in time, I'm not sure how this is going to resolve. What I can see is that I'm in process of an impulse. So thus, I'm kind of back to where I was. Now, could this D wave be in up here, right? Could this be our D? Right? It's a 50 other than a 618. It's not like it's never happened before, right? It's not the most common pivot for the D, but it's a 3 followed by a 3. Now, if this is going to be 5 down as an A, oh shit, or a 1. Let's assume we finish here. Oh, let me dig in there. What am I on? 12-hour. Let's see how this could play here. If this is 1, 2, 3, actually, I think you've finished it. I think there's a little truncation here to accommodate the internal swing structure. But into this is A, it looks like we're going to, well, there's that pattern, right? There it is. So I was trying to show it to you, right? Which you see in Bitcoin with unbelievable regularity, right? It's this, and then we go flat, and then we roll over here. So we're finishing with we get this pivot off of a 3. Well, can't finish that way. I mean, if you're an Elliottician, right, we can't finish there. So so what's the alternate, right? Oh, A, we're expanding the B, we're going into the 4, right? So where we'd have a C here to give us the 4. Now we'd be looking, okay, 2 to the 4. Well, let's check it, right? Same, right? Nothing changes here. Now, what's interesting here, if I use this as the 3, oh, okay, well, we're between the 38 and the 50, right? Prime, that very, very reasonable zone for a 4. You can kind of see a little structure here, a little chop that went in here. There's probably an order block right there as well. So we come in here 3, 4, A, B, C into the 4, down for the 5. Well, remember the algo doesn't care, right? Algo is only going to use low to high, right? Now this is the secondary pivot, right? If I go here, right, I'm a little bit off, but if I go in terms of the last pivot, oh, you could almost look at it this way. This is the last high before we came down and broke the 1. So 1, 2, 3, A, expand the B into the 4, right to the 50 to the tick, right? So if it's not, it's going to be one of these pivots, right? You're going to get the reaction. So there it is. Now we're getting to this algo target. Well, you might then say, okay, well, let's just use a little traditional length of the 1 projected from the proposed 4. Well, here's the 100. I'm already through that. So if I'm going to get the algo target down here for the A wave here, well, look at the 1618 right on the algo target. So you'd be looking at 1, 2, 3, 4. Right now, what are we getting here? We're going to get a 5. Well, let's assume we did. Well, here's the proposed E down here, that trend line we've just been looking at. Well, we don't want this going too far, actually, because the assumption is if we complete down here, and we don't know that it's going to be the 1618, but if as a reasonable target, let's get you off of there. If we're going to come down here, this is going to be the A, right? If we're going to come down for A, well, okay, that's what we're looking for. Into the B, down for the C, right? Which would set you up this way for the E as the triangle, right? So if I pull this back out. Okay, now we see the triangle finishing in a tighter coil than originally anticipated. Oh, let's see, I'd probably change this as well. I'd probably take this up here. If this is going to go A, and we're going to go B, and then we're going to come down C, right? If, right? Now, we don't know, right? So maybe we'll tweak this a little bit, right? I don't know that we're going to get there. We might do it this way. We may not get that much. It remains to be seen what we get here. So, right, really, we'll wait until that starts, because let's see the length of this. How far does this go, right? We might be pulling from here. So it's a little premature. But I'm just saying, how could it happen? How could it happen? Could I do it that way? A, B, C. Well, you know, we allow for a little throw over here. Not a lot. Not a lot. I mean, you can't have that much. You can allow for a little bit. Right now, that's a pretty good downsloping trend line. So it's a function of how far does this go? What do we get on the reaction? All right, we're going to do it like that. A, B, C, right? C is going to need to be, the extension will be in the A right now. So even as I'm saying that, I in the back of my head, I'm thinking, okay, am I putting this together to accommodate a bias? Well, maybe, right? So at this moment in time, I'm trying to look at, okay, if I'm going to get a 5 here, how can that fit? Well, what's the alternate, right? So the challenge becomes, in terms of trying to put together where the most probable count lies. This is, I think, a key piece to it, right? This, to me, is a hard 3. So it becomes difficult to look at an alternative here without changing that. And I'm very reluctant to change that, because I think that's a clear zigzag. So creates a little bit of a problem for the Elliottician. Okay, so if this is so let me up here. I'm thinking through my head without explaining it to you. Okay, if this is 3 and this is 3 and this is a 3, we can't be done down here, right? So we can't put the 4 here. And well, let me rephrase that. We can't put the 4 here and label it that way, right? We'd have to change the labeling. So then your first thought would be, oh, well, maybe this is the 4 and this is going to turn into some sort of the leading diag over here. And then you'd be working this as you might be trying to do it as a flat. So you'd have 3, 3, 5. Nope, doesn't work. Right? As long as it doesn't work because this is a 3, right? So then you're thinking, okay, wait a minute. What are the other scenarios here? Well, of course, one is that you force fit a 5 in here, which I'm very reluctant to do. But I can absolutely assure you that if this turns into if that's the 3 and this is, we're going to get something here and we're going to end up with a diag, I'll be back here figuring that out, right? We'll have to turn it into but you don't want to say, well, I'm going to wedge a 5 in there because I don't like what's happening in this leg. So I'm going to change my broader count. I think that's probably a mistake. This seems to be the most likely based on the price action. Again, the relentless sideways here. So to have one leg here where you didn't get quite what you're looking for, then completely relabel the entire thing, seems too early for that. My view, right? For what it's worth, my view. I think it's too soon to be doing that. Now, this is another conundrum, right? If we're going to get a descending. Let's see if I can get that flat like that. How can we do it this way? Right? If this is going to be some sort of descending triangle, well, okay, we got to see, what we get coming off of here. But that's a candidate as well. Of course, again, these all have to be 3s. So could we do that? Well, we could, right? So this could be A, B. Now we're going to come down here, C, right? So it might be something like that. It would lend itself here. Again, you could have some overthrow here. The overthrow would be the grabbing all that liquidity before we go up. It's a lot, right, to forecast in a triangle as to what we've got, right, until you get, right down to the nitty gritty in the last swing, right? So is this a D? We can't even be definitive, right, about whether or not. Again, I've seen some great Elliotticians that think this is 1, 2, 1, 2, right? And well, pardon me. this was the 4, and this is a 1, because you can work this into a 5. It's not as bad of a force fit as this is turning into a 5. You can work this. You can go 1, 2, 3, 4, 5. You can get that into a 5. So 1, 2, and some sort of diag coming off of here. That's going to get, that's right. How would you do it, right? You'd have to, Jesus, can you even do it? I think you'd be more inclined to be thinking that was ABC of a 1, and we'd be working now. So that would give you more room on the retrace to go ABC here, and as long as you stayed above this low here, you could probably get away with that. 1, we'd have to stay above. 2, 3, right? And again, that's a lot of just could be, right? Let's wait and see. Is there a trade here right now? Well, if you were... yeah, there was a trade there, right? So we just looked at it, right? So there was a 50 here, right? So you could have taken that off of the 4 to the 5. I didn't, right? I'm not. Rarely am I looking. Well, here it is. Rarely am I looking for a short in Bitcoin. But there was the trade, right? It was perfectly valid. Where's the trend, right? We'll look at that. Some ways that we can define that here. So where's the trend? Well, the current trend, so it's always a question of the trend at what degree, at what time frame here. Well, we're looking at a 12-hour here. Well, even if you did something as simple, here I'm using the God EMA just as a proxy for the, oh, geez, I think I have the Vegas on here. No, I don't. Just as a proxy for the Vegas, because they're very close. This being the average of the 200 EMA and the 200 SMA, right? It would be right in the middle of the Vegas wave, just a different template. So looking at that now, okay, well, if this is going to be a 5, does it still work? Well, not if we're going down here, right? We're going to have to hold here. Interesting. Right? It's going to be interesting to see, right? There's a lot of bearish sentiment around the market right now, right? So you mean look what's happening in the stock indexes, although they're rallying a touch. But I mean, just the market is all of a sudden, right? All of a sudden, oh man, the big bad Fed, all of a sudden we're going to tighten, and look at the impact of that across the market. So this remains to be, there's a little more information. Right now, what's the last trade? Swing, retrace to a 50, you got a target down here, right? So I wouldn't step in front of that necessarily until you get some reaction here. What you'd like to see is this completes the 5, and we come into a 3 here. Then if you're looking again, there would be another, well, here we can just, oh shit, whether you're using this, depends how far we go there, whether you're using one of these secondary pivots, shit, you could probably use this pivot as well. There's a lot of potential outcomes here, but right now, the main thing we got to focus on is what's happening down here, right? This is where the market wants to get there if it can, right? Whales are just looking at that going, oh, juicy. Okay, at this point, I'm going to try something a little bit different, just introducing some material here. Oh, members, we've been, you've had this content here for some time. But for YouTube subs, this is something you haven't seen from us before. And I do this for a couple of reasons. One, I think it really complements and it just augments what we're already doing so very nicely. And I think it helps with some of the drawbacks, particularly for new students, with Elliott Wave, where there's the element of subjectivity or the conundrum of, well, wait a second, when I've got 2 expert Elliottians that are each giving me different counts, 2, 5, 10, often, right, that's always the knock on Elliott Wave, that there's much subjectivity and interpretation to it. So one of the advantages of this that I like, and again, why I think it complements what we're already doing, is that it's very binary. Right? The trend is either up or it's down. Right now, of course, that depends on the time frame that you're looking at, but there's very much of, okay, well, based on market structure, we can identify the current trend at this degree or at this time frame, right? I'm used to Elliott Wave, so I think in degrees. But the same concept, if I'm looking at a 5-minute chart or if I'm looking at a 5-hour chart, right, my trends might be very different. So it's that reconciling the trend at those degrees and then looking for those opportunities whether it be very short term, medium term, and long term, are all in alignment here in terms of where the trend is, and then looking for opportunities to participate in that trend. So I can't do this much justice here, and figure maybe I go 20 minutes on this. So as a result, for any that are interested in, I've got a dedicated playlist over on our on the YouTube channel that speaks very specifically to this, and will give you some more insight into the some of the tools that we're going to use. Now, so let me just start here. Oh God, how's the best way to do this? Oh, I guess here. Let me. Oh, I'm going to hide. Oh God, where are they? Here. I'm going to hide the Elliott. Okay, so let me take that off. All right, let's just reset here. Oh, I'm probably going to go down to a smaller time frame. I mean, this is the section where we're kind of everybody's struggling with. What do we have here? Well, just looking at it this way, right? First thought is, okay, where's the trend, right? Do we have clear trend here? I mean, the 200 is often, a good mile marker, for lack of a better term, but we above below. Well, obviously at the moment, right, we're not too terribly far from it. We are below the 200. We really, you could make a case that this was just liquidity grabs, and kind of do the same thing down here. Well, okay, we're kind of going sideways, really. I mean, even if I did it, if I did it this way, right, we're in a range, right? So here we are halfway in the middle of the range. So what's a trader to do? Well, here at this degree, as we've just looked at, it's conflicting signals, right? I mean, we're right back into the apex of this triangle here, and we're, oh God, here from the low. What are we doing here? Right between the 50 and the golden zone. Now I'm going to take it out of log scale, or you can see we just tagged the golden zone here. So mixed messages, oh hey, whoa, I know an algo. Well, you can see the algo fired there. Now is he going to go get that target? Keep in mind, right, we've got an algo on the other side, right, if you recall from what we just looked at. Right, so we got competing algos here. As you will in every market, at every degree, there is always an algo on the other side. So we got one looking for that, and we got one looking for that. Now, who's going to get it? I wish there was an easy answer. Well, there isn't. There is no easy answer. If there was, I'd be short. I'd be very short or very long based on that, right? So there is no easy answer. So how do we deal with that? What do you do? Look here, we're just between a 50 and a golden zone. So you can just see this is a clear fib fight between competing algos, and they don't care what you think or where you are, long or short. Again, it's not a guy going, I'm going to fuck that guy, I'm going to take that down, run his stops. This is just software doing what it's written to do, right? That's all that's happening here. So sideways we go. All right, let's clear this up here and get down to the point here. This will be a 3-hour video. Okay, let's say, so I kind of start here so that you don't say, what I'm about to show you is not designed to replace everything we already know about the market, right? We're not taking off median lines. We're not getting out of geometry. We're not abandoning the golden zone and the measured move and the things that we've been talking and teaching and training on for the last 3 years. All we're doing is looking for ways to create higher probability locations for entry, and as the case may be, potentially better risk reward. How do we increase your win rate and also increase the reward when you're right and reduce the damage when you're wrong? Right, which is the name of the game, right? So much of what we're trying to do is just give you tools and teach you techniques so that you can do it for yourself, right? Where the goal is never to have you be dependent upon us, right? Our goal has always been to make you independent, right? So you don't need anyone's counsel to do the TA. You do it yourself. If you want to be part of a community, that's a different thing, right? There's many members that are some of them better technical analysts and better traders than I. They're so good they stay just because they like the community, right? That's the idea. It's not because of me or something I'm giving them. Anyway, so as we say here, let me here. I'm going to go on for too long. Okay, so here's this challenging section. What are we doing, right? We're ranging out here on a 12-hour, right? We got running the highs up here, and are we going to do the same thing down here, right? You can kind of see, right? Here's what we're doing. We're just, right now, it's somewhat trendless, right? We're on one side of the 200, we're on the other side of the 200. We're just going sideways, right? Makes it very hard to trade, right? Particularly out here at this higher time frame. So the idea here is we can be definitive about where if we it's almost like if you put a zigzag indicator on it. Okay, where's the last pivot high, last pivot low? So that in some degrees, in some ways, that's what this is, right? And it's not, there's nothing new under the sun in the market. So much of this is, a little bit of repackaging and repurposing and marketing. But there's definitely value to it, right? So I don't want to, poo-poo it before I introduce it to you. It's just that it's another approach to buying demand and selling supply, right? If you think of it that way. But it's very creative, pioneered by some FX traders. I'll let you do a little digging on that if you'd like, because I've got a couple of videos for you here that go into that. So what I'm going to do here is I'm going to apply an indicator here that it's done by a company here that we have partnered with. They're called Sonar Lab. Now, before you jump off here and go grab it. Oh, come here. Let's get you back on here. Okay. Oh, shit. I thought I had that on there. Oh, is it because I had it in log scale? Hang on a second. There you go. All right. So I'm going to introduce you to this piece of software. I'm going to introduce you to this company here. But before you jump on, pause the video and go as fast as you can to get it, right? Which is not that you are ready to do that yet, but you might be. We've put together a deal with these guys so they have a monthly fee for this software, and we'll get you 10% off. Right? So only if you use our code, right? So I'm only doing this now before I show it to you because I know it's common for people to pause the video, jump over to the website and go, I'll check it out. So here's the company, sonarlab.io is their web URL, and here's what you're going to want to be checking out, again, assuming you have any interest in this. And I'm going to tell you right now, this may not give you enough unless you do a little bit of homework, but you can do it from myself, or you can do it, they've got their own YouTube channel as well. Again, if you're going to go watch my content, it's because you like the way I teach, right? If you're going to watch their content, because you like the way they teach. But if you come over here and you look at this, go, okay, after what I'm about to show you, look at it and they go, that's pretty cool. Hey, I want to start the free trial. Well, if you come over here and you start one of their free trials, so you see their price points here, $59 a month would be a, of course, it's more discount the more you buy, but that may be a bit much for you right off the bat. So if you're going to do this one, well, at least we'll get you 10% off per month. So at the end of the year, right, you're going to make have some savings. So if you said, oh, that's cool, I'll check it out, start the free day trial. Well, if you don't use our link, right, you're not going to get the 10%. And what you can't do is go, I'm going to start the trial. Oh, I like it. Yeah, but I want that 10% because you'll be cookied and you'll be tied to another. You won't be tied to us. So if you want to do it, if you're interested, you got to use that code on checkout. And remember, that's trial, right? There's no credit card required. But even if you're trialing it, that's the only way you could in the future, if you wanted to pursue it, get that discount. You'd have to start the trial. When you go 7-day trial, it's going to want that discount code. And you're going to be, or add coupon, that's what it'll be. It's add coupon. You're going to be sorry, right, if you don't do it that way. Right, okay, so enough promo, enough about money savings, right? But we just, it wasn't easy to get that deal with them because there's not a lot of, at $59, there's not a lot of margin there. So 10% off if you do it. Okay, so with that said, now let's hide that and let's get into what we're talking about. So now I'm going to apply it. What have I got? A 12-hour? That'll do fine. So here's their indicator. It's called the Smart Money Concepts, right? So this is, if you've been around the markets here, particularly in the FX space, you've probably seen this. It's whether you're calling it market structure, most commonly termed as Smart Money Concepts, and pioneered again by an FX trader. And there's some peculiarities to the FX market that are unique to FX, but I think you'll find this is you see very similar things happening in crypto. We actually have developed a whole set of tools for NinjaTrader for day trading this in the futures market. So it's applicable to all asset classes, but it came from FX because just the peculiarities of FX, where they still actually have very active market makers and some of the patterns that they produce based on the way that they move and manipulate the market. So that's where it came from here. But just to give you some basic ideas, essentially here, let's just focus on this section. We're just going to look at the swing structure. So, and again, I can't do this justice in the amount of time that I've got here. So this is the last low that broke some structure, right? So if we look here, this is a change of character here, which kicks up to that new high, right? So this is the last low that created a new high. Since this low, there has been no new low. So this, in the terminology of SMC or market structure, however you want to describe it, you would identify it this way. Oh, where do I want here? I want always have a hard time finding this. All right, so here's the important piece. This is the last low that gave us a new high. Since then, there is no new low. So from this pivot here in this range, the trend is higher. Right? This is the strong low. Now, if that language and the ideas of swing structure and market structure and how we're defining highs and lows and strong and weak is unclear to you, or if you've not seen any of the smart money concepts in being trained by other educators, well, I'm going to refer you over to our YouTube channel here. I have 2 videos here that are dedicated to working with this on TradingView here, the SMC Market Structure Theory and Training for TradingView. This is all for NinjaTrader, right? Same concept, but that's all NinjaTrader for the futures market. This is all, well, you can apply it to any market, but it's more crypto specific and more detail about this company and their set of tools. So let's come back here. Now, what I've got here, I'm going to go into their settings here. And again, I can't go through all of this here. I'm going to turn on focus mode. So it's just going to focus on the most recent price action here. So I really just want to focus on this section here, because what happened back here, all of that, while that would be interesting, I'd like to just focus on what's in front of me. So what I can see here is I've got a strong low, I've got a high, and all of the swing structure inside of that is all the internal swing structure, right? Which is often how you'll see it labeled here. So as a matter of fact, here, if I go down, here's our main swing structure, which is in white, and then the internal swing structure here is in orange. So some of this language may or may not, you may be familiar with here. Break of structure is not a difficult concept here, but there's a difference between a break of structure and a change of character. Again, if you're unfamiliar with that, come over here and watch these videos. It might give you something to do over the weekend. If you're looking to augment some of your TA skills, that's not a bad place to go. Right, and again, I would encourage you to check out the trial. They've got their own YouTube channel and they do some good training there as well. So with that said here, so what we see here, we've used this language before, and many of you may be familiar with the idea of an order block. And it's conceptually, the idea here is that this is where smart money would have entered the market. And again, without going into all the why behind this here, and some of it is specific to the FX market where market makers are loading up and then mitigating what they've done. The idea here is there's potentially strong support here. So whether or not you're looking at it in terms of longs that might be defending here, this could be a situation here where the market came out of here quickly enough that all the orders didn't get filled and they can get refilled down here. But right now, as we sit here, in essence, what we're doing is we're testing the level of support. Is there demand here? Well, you can see the first time we came in, here I'm on a 12-hour. First time we came in, we got just the reaction we were looking for, because ideally you want the reaction to come out of here quickly. Well, as we come back down to tap it, you may not be able to note here, but we've got an order block within an order block. So this one has already been mitigated to give us that reaction. Now we're back to test the internal. We'll look at that in a second. So what I'm going to do here is just draw this up here on this. As I use just the Gantt square. I've just got it down to where I just have a 100 and a 50. So I can look at that difference here between the top being premium, the bottom being discount. So you can see we came down here into the discount and had that good pop. Likely ran into another order block, right? Here's another one here that it ran into. So we're just in this battle back and forth. But let me just take this down here and just show this. Again, I can't really do a full training here, but those two videos will give you a lot more. Okay, so let me go. Let's start from a 12 to a 4. Now there's the order block I just drew. If I bring this over here, so you see we're coming right out of the last pivot down here. So note, right, it's going to look different on a 4-hour because I'm getting multiple candles here on the 12. That was just one. Again, we go over that in the videos here. So here, we still, at this degree, we have a strong low and a swing high. Now this on the 12-hour, that was the strong, right? But we got that break. Now we've had another break here. So here's the break of structure because it's taking out the last high, right? So this is a strong low, comes down. We do not get a new low. So this becomes also a strong low. So if I stay consistent here, so this now becomes another strong low, right? So here's the swing high. SH is the swing high. Now all this little action in here, this is the internal structure where I'm going from, I'm doing lower lows, lower highs. All of a sudden I get a break. That's a change of character. I get a higher high. Now I'm coming back down in to test the demand. Well, these are the two lows that have each given us new highs. So as we retrace here, even though we look at this and go, hey man, that sure looks like we're in in a downtrend? We are. There's the 200 right there, so we're below the 200. Do we have a potential opportunity here for a long? Well, remember, the idea here is to try and get the longer term, the higher time frame, in sync with the lower time frame. Well, right now we can just see what happened here. We just went up and we banged the 200 and we got into a supply zone and got rejected. So back down we are here. Now, is this another buy? Well, you can look at it here, and the current trend based on swing structure is up. But if we look at the 200, we're down. So you get a little bit of conflicting signals here. So from the 4, then I might go to the 1 and see how we look here. Again, I'm still within the order block that I drew here. Let me bring this up a little bit here. There, now it looks even bigger, right? So remember, on a 12-hour, that's just one candle. Now I'm down to a 1 hour. I've got multiple candles. Where's the trend? Where's the trend? Right, well, now we look here down on the 1 hour. Now let me open this up a little bit more. All right, so down on the 1 hour. Okay, well, here's the last swing high, right, left behind a supply zone here. I prefer the language supply-demand zone. And we've just tapped into a demand zone here, although most people will recognize the phraseology as an order block. So here, I'm in the 12-hour order block right here, right? This is the range that I drew initially. I'm in that order block now. I'm just now visiting a second order block here. But where's the trend, right? Let me stay consistent here. Oh, shit, that thing always eludes me. Where is it? Here. Okay, so here's the last high that gave me a break of structure that gave me a low. So I have mixed signals now. So I've got an uptrend on the higher time frames, but I come down to an hourly, I'm in a downtrend. Well, just look at that's the 18 and the 9 and the 18 EMAs. Well, look, as we're coming down here, so clearly on the 16-minute we are in a downtrend. Remember, we're trying to refine down and down and down to where we get to the point where, okay, we've got an uptrend in all markets, small, medium, and large, if you will, right? Higher time frame, medium time frame, and smallest time frame, and you can take it all the way down to the 1 minute. But here, as we see the reaction here, the idea is we want to come out of here quickly. So we've just tapped this order block here, again, within the larger order block, and we're getting a little reaction. But until we get a break of structure here, it has to take out that high. We have to take out that high and then look for that to come back down and maybe tap into a demand zone that would be down here before we carry on, right? And we'd have the same phenomenon happening here. We'd break that, right, which would give us potentially, let's get you off of there. Potentially, now we'd have some swing structure here changing internally back to the demand zone. So you might anticipate that you'd have an order block down here, come back to grab any unfilled orders, bulls defending. Now you're in sync, right? So you'd have now the 1 hour in sync with the higher time frame, and then you might take it even down further. We could go over even to a 15-minute. Where's the trend on the 15-minute? Again, I know I'm kind of going through this way faster than I would and than I do here, right? Those are actually kind of long because it takes a little bit of explanation. At first glance, it looks like, oh, okay, well, how hard can that be? Well, and you can see some nice examples here, right? So here's the strong high, right? So this is the last high that broke structure here. But you can see we've got little changes of character. So here we come back to it, down, we come back again, right? We're tapping into that supply. Down we go. So now as we sit here, I'm all the way down to the 15-minute. Is there an order block? Well, I have an order block within an order block here. Now, if I take that one off, I'm in this giant order block. Remember, here's the strong high, right? So the trend is still down. The last thing that happened was the major break of structure here. So trend is down. Before we're buyers, we want to wait until we get everybody in agreement. Lower, mid, upper. So sitting right here, even though we are in a large demand zone here, we don't have everybody in sync, right? So we've got the 1 hour and the 15-minute are both in downtrend. The 12-hour that we started with is still in an uptrend, right? So here's where we started, because these are the lows that have given us the breaks that we were looking for. I know that I'm going through that way faster than if you haven't seen this before. I can't do it justice in this amount of time. If you have seen it before, and perhaps you're familiar with this, well, you're going, well, shit, you barely scratched the surface, right? I know. I thought I'd introduce it here. Introduce this company here. If you're interested and you're looking for some new approaches, this is not a bad way to go. And I would just finish up with this. One of the things that inspired me to do this here is my 26-year-old son. Now, he had just graduated with a degree in electrical engineering. He's a smart kid, right? Always has been. So he's curious about what his dad's doing. So he said, okay, let me check out, what you're doing. He's kind of interested in trading. He just got out of school. He's between, and he's kind of got some time on his hands. So he's doing a little trading and trying to learn as he's going. So at 26, he's coming in and looking at what we're doing in the belt system with Elliott Wave. And in his peer group, what I'm finding here, and this really influenced me, is that at his age range, right, and this is very much the market that we appeal to, people that are coming into the markets that are new to it, right? They're looking for some understanding of how the market works, how it moves, and some of the nuances and the techniques that are available to you. Well, in that 25, I've been seeing it really across the markets, 25 to 35. Boy, there is really a huge amount of interest in this market structure, SMC approach to technical analysis. I think that they feel like it's easier. I'm not so sure that that's necessarily the case, but I think that the younger market is drawn to it more so than looking at an Elliott Wave book and realizing, wait a minute, there's 23 different types of corrections I have to memorize. Yeah, right. So for the new student to the markets, that may be too much for them, right? So what they're looking for is something a little bit easier to identify, right? So it's not hard for us to identify, well, where's the last low that created a new high, right? That's pretty easy to do. Just draw some order blocks, or let a piece of software, even better, do it for you. Easier. Now, I don't know what that says about the future of the trading community, is that the up-and-coming traders are looking for easy. It's not so much about easy. The question is ultimately, right, is it effective, right? And I can tell you it is very effective, but it takes some practice, right? So it's not as easy as it appears at first glance, even with a piece of software doing it for you. Because let's be very clear, right? You don't need a piece of software. It's a luxury. I mean, you could do it yourself. Say, okay, well, here's the last low. All right, here's the last high. Okay, so in this range here, I mean, you could do this all yourself. But if you have the resources and what a luxury to let a piece of software do it for you, right? And identify all the things so you don't miss. So particularly effective when you're first learning. This can be really helpful, much like, some of the Elliott Wave counters, right? So when you're first starting out, that was one of the appeals of Motor Wave. Oh, it's going to count for me. Well, the better you get, the less you want somebody counting it for you. And the more, you want to use your own skill set here to do the analysis for yourself. There are times where it can be an efficiency benefit, right? It can save you some time. And the same thing here. Again, you could draw all this yourself, right? But I look at that and go, okay, great. Yeah, I could do that. But if I can create some efficiency here and let a piece of software do it for me, why would I not do that? Well, the only reason you wouldn't, one, this technical approach doesn't appeal to you, or two, $59 is beyond your current available budget for trading tools, because otherwise it's a no-brainer, right? This can only, now let me take this. I'll wrap up here. Oh God, here now let's put it back together here. I have everybody? Yeah, I think we do. Okay. So now let me pull out here and we'll look at this in the context of how the swing structure fits in with the Elliott count we just walked through. And this is really what I was trying to do, though. The whole way is hard to do it without you having real insight to what this is all about. Again, if it's new to you. So here as we just looked at this is going to be an expanded B. Well, look what's happening here, and you can really look at that and say, well, what really happened here? Oh God, trading view, fuck, that drives me, right? What really happened here, right? That was a stop run, right? You can just see what they did, right? It's just common, right? As I said, I think one of the first things I said in this video, the market moves from pools of liquidity to pools of liquidity, not to price. Right? It doesn't move to price because there's a price there. It moves to the liquidity pool. Here's the liquidity underneath. Well, it's not hard to figure out, guys, right? There's going to be stops there. What'd they do here? They ran the stops. Now, here there's going to be stops here. So much like we talk about here. So if they can't get this, right? If this is, now we're in the demand zone here, right? So here's the order block. This is a demand zone, but the trend is down. Do you want to be a buyer here? All right. I mean, here you got the 18 and the 9 rolling over. You're below the 200, but you are at a demand zone here. So, I mean, it would be a counter trend trade. If you're looking at the 4 going into the 5, why would you want to take that? Well, you'd be looking to trade maybe the 2 of the 5th. Maybe, right? Or it depends how this is going to resolve. But it's the same thing happens, right? We go down to a 4 hour and say, oh, there's the C. So here's the A, here's the B, here 1, 2, 3, 4, 5 into the C, where we come right into a supply zone and look at the reaction coming down, right? Why, right? Here's the last up, right? Here's the supply zone. Look what we do. We go right to the 50% of it and straight down. Right, so there's the 4 hour. Do you want to be a buyer here? Right, we go back to the 12 hour. We're in a demand zone. Now I go to the 4 hour. I've got back-to-back supply zones. I'm going down, and I've got some gaps here, commonly referred to as fair value gaps, where we've got a gap between here. If I draw it this way, we've got a gap between the low of this bar and the high of this bar, right? So it's an imbalance in the market. Market likes to fill those, right? It's much like a gap. Oh, well, here again, I'm getting ahead of myself, and I can't get into all of this, right? But if you're interested and want to learn more about this, what all these changes of character, breaks of structure, if you haven't seen it, right, there's no shortage of 25-year-old millennials from the UK that are teaching this in FX. I mean, there's got to be 1,000 of them. It's unbelievable how I don't know why, what it is. I guess the FX is very big in the UK. But boy, has this become popular amongst younger traders. So we just, gravitating to where the market interest lies. I mean, you'll never get me away from 3s and 5s, right? It's literally burned into my brain. But this has been a nice complement to what we're currently doing. And there are lots of trade opportunities, right? So we've been struggling right now, looking at the daily, the Elliott Wave, you're in a sideways triangle forever. I mean, we're over a year we've been in that. Well, this creates lots of trading opportunities. So this is something to augment what you're currently doing. Again, I would encourage you, if you did this, let me tell you how you'll have an unsuccessful experience. If you come over here, you grab the trial, and you fuck around with it for 7 days. You will not have a good experience. And I would strongly suggest you do not trade with it until you understand it. If you want to understand it, well, sure, you could go to YouTube and do some SFs and just Google it, or search it, I should say. Yes, you are Googling if you're on YouTube. Search it. You'll find 10,000 people teaching it. If you like the way I teach, come over here, right? I got 2 videos here that walk you through not only the theory. Now, it's long, right? You got to understand the theory. You got to get through the theory and then an introduction to all of the tools and the nuances, everything that's in this tool, because there's a lot in here, right? As I showed you, there's a lot in here that you're going to have to understand, right? I mean, it's not rocket science, but it's like you're going to need the theory before you do anything else, right? You got to have the theory, or it won't make sense to you. So thus, right, we get you a little discount. Tried to do it, to help you here if that helps you a little bit. I mean, at $59, again, it's not something we're doing for the big money, but it is, I think, a nice set of tools here, and you'll see me start to incorporate this into the analysis we're doing. Okay, there. Shit, way too long. Okay, I went an hour. I'm just trying not to, but I can't do it justice here in the little bit of time that I have. Okay, guys. So there you go. I'm going to wrap it up there. So maybe you got a few ideas out of this, maybe some new things to consider over the weekend. I would encourage you, if you have the time this weekend, at least if you're not mine, watch somebody's video. Here, you can come over here and watch theirs, right? They've got a YouTube channel. Just go Sonar Lab on YouTube if you're interested. But if you don't use that code, right, it's one and done. Once you're cookied to them, right, you won't be able to come back and, I saw it on Trade Devils here. Can I get that 10% monthly? Nope, that's not how it works. Okay, guys, there you go. Have a good weekend. We'll be back for a live stream on Monday. And with that, I wish you guys a good afternoon, a good weekend, and we'll see you then.